you want your money to work harder for you. Not that sort of work. In this video, we want you to think for a moment about how you can make your money work harder for you and increase the worth of your financial box. Hi, my name is Patrick Hancock, part of the team here at Crest Financial Services. Are you looking for ways to strengthen your position and build your wealth? You might want to consider investing as a way to make your money work harder for you, to generate additional income and to build your assets. You've probably heard terms like positive gearing, negative gearing, dividends, capital gains. Put simply, investing is using your own money or a combination of your own and borrowed funds to build your wealth. So, types of investments. Look, depending on your goals, the amount you want to invest, and your risk comfort level, you have a range of options to choose from. Fixed term and high interest savings accounts allow you to earn interest on the money you deposit. The pros? You can choose a fixed rate of return, so you know exactly what you will earn for your investment. You can have confidence knowing that your capital is safe, and your rate of return will normally be higher than what you can get from your everyday bank account. The cons? Capital growth is limited. If your investment term is fixed, there may be fees to access your funds before the end of the term, and other types of investments may offer a higher rate of return. When you buy shares, you use your funds to invest directly in a company. Most shares we recommend are listed on an exchange like the ASX, the Australian Stock Exchange. With shares, you actually become part owner of the company. Shares may also be referred to as stocks, securities, or equities. The pros? Buying shares gives you direct control over the companies you're invested in. You can build a diversified share portfolio to help minimise risks. You can achieve capital gains from owning an asset that can grow in value over time. And you can receive income in the form of dividends and potential tax benefits. The cons? Share prices for companies can be volatile. If the company goes broke, you're the last in line to be paid, so you may not get your money back. The value of your shares will go up and down from month to month, and your income may vary. And if you own shares, it's important to keep up with how they're performing compared to similar companies and the market as a whole. Managed funds. In a managed fund, an investment manager buys and sells shares or other assets for you. Your money is pooled together with other investors, giving you investment options you would not be able to access on your own. The pros? With managed funds, your eggs are spread across a number of baskets. They allow you to access a broad range of assets or markets with a relatively small amount of cash. They allow you to make regular contributions while reducing paperwork and making your tax return easier. The cons? You may be charged higher fees than other investment types. You might not be able to convert your investment to cash when you want to, and you rely on the skills of other people and you don't control the investment decisions. Property is a popular form of investment. Houses and units can be easier to understand than other types of investment. The aim of property investing is to generate rental income and to benefit from the property's value growing over time. The pros? You can touch and see the bricks and mortar. Property can be less volatile than shares or other investments, and if you take out a loan to purchase an investment property, interest on the loan and property expenses can be tax deductible. The cons? If property is your only investment, the risk is that all your eggs are in one basket. Rental income may not cover your mortgage payments or other expenses. There are high entry and exit costs such as stamp duty, legal fees, and real estate agents' fees. Property is a lumpy asset. If you need to access any of the money you have tied up in property, you can't just sell a garage or bedroom. And then there's tenancy risk. No tenants, no income. And even if you have tenants, you need to be sure that they pay their rent. We understand it may be daunting for you to make the right investment choices. Your strategies will be influenced by your income and expenses, the amount you have to invest, your short and long-term goals, your level of comfort around investment risk, your preference of geared or non-geared investments, and a fair bit more. If you want to know more about investing and ensure that you make the right decisions, it just makes sense to talk to people in the know. Crest Financial Services help people just like you every day to understand investing and to make the right investment choices. With a lifetime of experience in investment, we have a wealth of knowledge to help put you on the right path to making your money work harder. The right way. For further information on choosing the right strategies to increase the size of your financial box, see the information and resources available at crestfs.com.au or speak to one of our experienced advisors today. Crest Financial Services, working together for your future.